Hello everyone. Today we're going to talk about Bitcoin, which has finally broken through the $100,000 mark and is currently trading at 95,979. But before that, let me remind you that we previously reviewed Tesla and Palantir stocks. And even though, as expected, they updated last week's lows this week, they are still very far from their target levels. Moreover, Palantir seems poised for a very deep correction down to around $90. Considering that the stock is currently trading at about 175. I'm saying this because Bitcoin, accordingly, also has a chance to drop significantly lower than the current 96,000. And now let's move on to the chart. By the way, subscribe to the channel because we have a wide variety of reviews, stock market, cryptocurrency, and commodities. Maybe I'll turn my attention to the Forex market, but for now that's how it is. So leave your comments. You can hit the like button right now. So, weekly candles. I pointed out that we have a very important support level at $104,463. Notice that we hit this level many times right here and only 1 week closed below it. It turned out to be a false breakout. And after that, 1 week, then another, then here the third, the last one, and every time we closed above. So there were no formal reasons to open a short at the price of $104,500. But considering that this week will most likely close much lower than the level of 104,464, the decline is likely to continue, and continue quite strongly. In my experience, when you aren't given an entry point, and in fact you weren't given one here. Why? Because formally only now do we have the right to open a short. But for this short, the stop should be set above the high of the current week, and that's around $107,500. That's a very large stop. And when you aren't given such an entry point, with the position being set at a candle close far below the potential stop, then most likely the decline will continue because there will be fewer unnecessary passengers in this submarine. Now let's continue reasoning further. I marked the key level at 93,738. Notice that we haven't reached this level yet. This means that either in the remaining 2 days of the current week or next week, we are very likely to reach the level of $93,738. If we break through it, which isn't guaranteed, but as I said, referring to the stock market, the probability is quite high, then the next target level is the 100-week moving average. Right now it's around $83,000. Well, we can mark this level as 86,000. Why? Because the 100-week average is rising into this area. Let's turn on the magnet. And here is this level, $86,082. You can move this so-called circle into this area. This is our target level. If we break through it, then the next technical level is $78,000. And I think we'll see 86 as well. The other question is, how will we get there? And there could be 2 ways. The first way is straight to here. And let me, as usual, make it yellow and bold. Well, and the second way is still a retest of 102,000, the 50-week, maybe even 104, and then again up to here. So I still tend to think that the decline will continue and it will go deeper than it is now. Now let's look at the weekly candles, at the monthly ones. What do we see on the monthly candles? We see that the August candle, I'll repeat or remind you, the August candle set a new all-time high, but closed with a red body. The October candle once again set a new all-time high, but closed with a red body. I mentioned that by formal criteria this is a sideways trend, but due to the August and October candles, the breakout priority for this sideways range is downward. And the target level for the decline is the base of this candle, $94,000, which is in fact where we have arrived. And the next target level is the base of the previous April candle, which is already $82,500. So expect 82.5 and most likely you'll see it happen. Besides everything else, take note here. Let me just delete all the markings and redraw everything from scratch. Here we connect the neighboring highs and also connect the highs on the RSI. At the very least they're not increasing, and at most each one is lower than the previous. Meanwhile the price is rising. The next price highs are right here. Let's make them white so they stand out. They keep going higher, but the RSI is already going lower. This is a double divergence. So here's the first stage of divergence, the first one, and here's the second divergence. This divergence indicates that our target levels for the RSI are either around the value of 50 for the RSI, not the price, or around the value of 30. I don't know what the price will be when the RSI is at 50, and I don't know what the price will be when the RSI is at 30, but this gives you a reference point for when the decline might stop and even reverse. Next point. I want to remind you that the Chicago Mercantile Exchange closed on Friday at $95,045. And this means that, with high probability, by the start of trading in America, either late Sunday or early Monday, we will see Bitcoin return from the 96,000 level, or maybe 97 or even 100,000 back down, all the way back to the same level, $95,000. And this is yet another reason, at the very least, not to open long positions. It's very risky. Whether to open short positions, I'm not sure, but at the very least, that carries much less risk than buying Bitcoin at this point on the chart. On that note, I suggest we wrap up the review. Or let's switch to the daily candles. I want to show you something else. Look, our RSI has reached the value of 30. It seems like there's a lot of overselling. And you might say to me, if Bitcoin ends up at a price of 100,000, 120, 150, or even a million tomorrow or in 3 days, why didn't you say to buy? Why did you say you can't go long here? Why? Because you can go long only when there are the appropriate structures. Well, let's name two of them. The first is a bullish engulfing pattern. Do you see a bullish engulfing here where a green candle engulfs a red one? And not just any red candle, but one that set a new local low. No, there's no engulfing here, not on the weekly candles, not on the monthly ones. So there's no reason based on this factor or this criterion to take a long position. A bullish divergence, or convergence as I call it, can also be a reason. That's when the price lows are decreasing, but the RSI lows are not. But pay attention, I'll remove this line now, and I'll remove the previous one as well. Here we have one price low, here we have one RSI low, here we have a lower price low, and here we have a lower RSI low. So everything is consistent here. The price is decreasing, the RSI lows are also decreasing, so there's no bullish divergence here either. That means no longs. Trade carefully. Subscribe to the channel and leave your comments. Write which instruments you would like me to analyze and review. A lot depends on you. Subscribe? We will be looking at the stock market, the commodities market, and the cryptocurrency market together, step by step. All the instruments you mention, we will eventually review if you write them. Otherwise, I'll choose them myself. Goodbye.